Hi, before you look at a stock, you may want to consider the risk and reward that you can get from it. Right, this is what we're going to look at in the next few minutes with this timing widget at EPSMomentum.com. So here we are. How do we find the right timing for the stock, the right sizing, the right risk and reward? This is all in the timing widget that you can see here. I can check and uncheck this widget. So the first part of the widget will tell you the last price of the current stock, the price during the earning day, ED stands for earning day, and the price change since that earning day, right? So that's very important because you want to know if the stock has been rallying since the earning day. And we can see it here in the graphic where you can see the 52-week high, 52-week low, the earning day here in white, the last price in red, and you can see if it's above or not. You also have the volume ratio for the week. It's a weekly ratio basically, and a daily ratio, 1 over 20-day type of ratio. So very heavily traded in the last 2 days. As you can see, the stock just popped up, big volume. So that's really interesting and important. Also notice this green now indicator, which you can see here, TMS, and all three of these are positive. You can see on the chart they're all positive. So that means the timing is good. So that's useful right there. After that, you have the target prices that are coming from Wall Street analysts, right? So these analysts will give you a medium, high, and low band of where the price could go. So 240 is way above the 52-week high. Actually, it is below the 52-week high of 279.23. The mid is 286, so today is 282, so it looks like it's right in the middle, and the low is 149. It went as low as 130 historically. The second thing is you want to be able to scale your investment and position your stop level, right? So you know, it's always useful to limit your loss and to use a stop. So if you start with a $10,000 investment, that would mean 54 shares based on the price of 182. Out of those 54 shares as 182, you get pretty much close to $10,000. But here the important thing is you get the average true range of the stock for at least 2 times the average true range. So what does that mean? So for people who are not familiar with the average true range, this is basically the range, the day range, the distance between either the close and the high, or the close and the low, depending on where the candle goes. But it's basically how volatile, it's a measure of volatility of the stock. So here we have for 1 day, the stock could move 17%, which is extremely high, and we've seen it because it just popped up. There's a potential loss of $51 per stock. Since you own 54 of them, that could be $1,718, right? So 2 times that average range, meaning 2 days in a row, you kind of have an average day of loss. That would mean a 34% drop, so about 3,400 down. So that's your max loss here. Other indication is, you see, it just popped up a day or two before, right? However, if you look at more of a on a weekly basis, those numbers are more mild, right? So the weekly ATR is 1722, and you see the value here that you can lose. And this is also interesting. This is the 1 day 2 sigma. So if you have all the distributions of average to range, this is the 2 sigma. So, you know, if you take two standard deviation away from the mean, you could potentially lose 21% in a day, right? So why do we take 2 average true range for the stop, and we position this? We could, you know, help you position the stop there, at what level. The reason is that you know, basically you're supposed to get the timing right for the day you buy it. Maybe you give it another day of wiggle room, but by the third day, you know, if you know your investment is not in good shape, that means you pretty much have the wrong timing, right? So maybe you want to start fresh and cut your position, right? So this is very important to scale your investment. So again, here the timing bias you can monitor. The average range is also here on the chart, really useful. And then the other thing you can do is you can obviously go into the screener where you can see all those fields here that you can use. So the 2-day average to range, and you can filter for that. You can filter for market cap. You can filter for price level. I can also have my target price, distance to high target price, right? And then I will see here, you know, how far away I am from the high market, the high target price. So that means, you know, if I sort, you know, this guy 144%, so I still have some room to grow on all these stocks. So again, very useful to play around with, and I hope you'll enjoy it. Thank you very much.